Real estate has become one of the most popular alternative investments outside of stocks and bonds. As a result, the financial markets have evolved to the point that there are now a multitude of ways that you can invest in real estate. Real estate funds have emerged as a key investment tool, really revolutionizing the way that investors like you and I access and benefit from the real estate market. In this video, I'm going to explain what a real estate fund is and why many people find them appealing. Let's talk about what a real estate fund is. A fund is really nothing more than a pooled group of monies that has a dedicated focus on purchasing real estate. Now again, there's different types of real estate funds. You have fund specifics where they are investing in apartments or office space, or you have general commercial real estate investing. So there are a variety of different funds, but at the end of the day, what it is there is a pool of capital that comes together that operates for a specific time period, purchasing specific type of real estate investments with specific objectives. Well, let's talk about the benefits of investing in a fund. So one of the clear benefits is you have access to larger, potentially more expensive properties that are managed by professionals. So what I mean by that is many people, let's say, for example, you see the value of investing in rental real estate, right? So for many individual investors, you could go out and buy or acquire a rental home or maybe a duplex. So now you own 2 apartment units in this duplex. You either paid cash for it, $200,000, or you went out and you borrowed money from the bank, put down $50,000 and borrowed the $150,000, and you've got this rental property. Now, unfortunately, though, you're coming together with that with some measure of headaches, whereas where you invest that $200,000 into a fund that invests in apartments, now you're invested in a 150 unit apartment. So instead of 2 units, you got 150. Or if it's a fund that's investing across many more apartments, then now you're invested in a fund that's invested in 5,000 apartments. So again, you have a greater diffusion of risk because you have more assets in there, and you have access to being able to purchase, like, let's even say a single apartment complex that cost $18 million. Well, you may not be in a position to invest $18 million, but you're in a position to invest $200,000. Let's talk about, again, furthering of the benefits of that is that not only do you have access to a higher quality, larger type investment, but it's also managed by a professional. So again, take our company, for example. So we have an asset manager that's overseeing the property. I'm working together with our asset management team on a daily, weekly basis. And then at the property level, we have a professional property manager that's there on site, professional maintenance staff that's there on site, and then additionally a regional manager that oversees their activities as well. So you have a professional level of execution that's ensuring that things are going well and executed to the best of the abilities of the project. Not to mention that you don't have to be actively involved. There's definitely a passive value to that where you're investing that $200,000 and then now you're getting return and growth on that money. Professional individuals are executing on the tangible day-to-day aspects of the real estate, and you don't have to deal with it. Unlike that duplex example, right? The duplex example, you have somebody move out, your vacancy just went to 50%, or the tenant has a clogged toilet at 11 o'clock on a Friday night. Boom, you're getting that phone call. I mean, and just as a funny note, in the early days of the beginning in 2003, I remember I got those calls, right? I started off, my very first place I bought was a duplex. I lived in one side, rented the other side out. Then we moved out of that, rented both sides out, bought a small apartment complex in 2003 in St. Petersburg, Florida. And I remember the phone call coming in at 11 o'clock on a Friday night, and it's the toilet's backed up at one of the apartments in the duplex. And my wife's like, why in God's green earth are you doing this? And so, look, I'm not immune to that pain, but that's part of it. And so again, by investing in a fund, you don't have to deal with some of those tenants, toilets, and headaches. Not only to mention that, but again, you get greater diversification because you're invested into a larger asset with 100 units or 150 units or multiple assets across a fund. And on some funds, they're also a diversification of asset types, meaning you're invested in storage units, you're invested in office space, you're invested in multifamily apartments or industrial. And so there's really a benefit there. And then there's also a tax efficiency that can come into play through that investment as well. So now you also may have heard of the term REITs, real estate investment trusts. And again, you have a great deal of those that are exchange traded that you can buy through your brokerage at Charles Schwab or whomever you deal with there. That's different from a private real estate fund in that the REIT oftentimes has, specific designation of how much money they have to distribute on a regular basis. A lot of times they'll have a closed-in period of what time they're going to close out the fund. But also equally of importance is they have a share price that rises and falls based on market perception. So you could put your 200,000 in there and you see some shifts in the overall market perceptions and your 200,000's down by 10 or 15%. Whereas with a private real estate fund, it is not publicly traded. It's backed by the assets that are in the fund. And you typically have a bit more of direct access to the operator so that you're not 4 steps removed, but you're dealing face to face with the people that are investing in the actual real estate. Well, so how do you invest in a real estate fund? Again, it is an investment opportunity that you've got to connect with a sponsor, a firm similar to ours. You want to absolutely do your due diligence on them and the firm, meet with the investment representative team. It's critical to understand, and I mentioned this in another video when we're talking about market cycles. I want to encourage you to check that one out. But have they been through the full market cycles? Are you investing with somebody that's just been investing since 2017 when all they ever knew was an up market? Look, you want to understand that they know how to operate both in good times and bad times. I think of even one of our testimonials on our website. It's a real estate investor attorney. It's a real estate attorney, been so for 40 years. He's invested with us for the last 20 years. And he even said, I remember in his comments, that I've invested with Randy through good times and bad, and I've seen him be able to navigate all of those circumstances. And so it's critical to do your due diligence, understand who you're investing with, then meet with the investment representative team. Once you've got all of that nailed down, now you can go forward, wire your money, and put that money to work. And then ensure that with that, you're getting regular updates. Like for our people, we have an investment portal that you have access to. On a monthly basis, we're uploading the financial data and performance of the property, and then we either give monthly or quarterly updates depending on the project in an overall, synoptic regard to what's going on at the property. So make sure that you have that nailed down before investing. That's all I have for you today. If you're interested in investing in multifamily real estate with me, click the link in the description of this video to join our investor club and get early access to off-market multifamily investment opportunities. Thanks for watching. Make sure to like this video and subscribe to my channel for more content on real estate investing. See you in the next video.